Hey everybody, it's Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, June 18th, 2019, and we are now in the final hour of the market, as many of you know. And in my opinion, the prices during the final hour are the strongest and most valid prices to make my entry and exit decisions on. And more specifically, the prices that are closest to the close are the prices that I think are the most valid. So that's how I make my buying and selling decisions the majority of the time. And so that is what we're going to do today. Let me just make sure we're up and running okay and that everybody can hear me. Hey, David Gordon Russell. How you doing, my friend? Good to see you. Thank you so much for dropping by today. I appreciate it. Yeah, we've got a lot of stuff to go over today. That's for sure. All right. So, give me 1 second. And I appreciate it. All right. I think we're ready to go. Hey, Mount Doji, how you doing? Hey, Johnny, you can hear me? Good. Good to see you, Johnny. All right. So the format of today, as normal, first of all, we're going to go ahead and run the U.S. legal disclaimer. Then we're going to come back. We're going to go through all of my current positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them moving forward. After that, we're going to go through my watch list, each stock in my watch list one by one, and we're going to see if there are any possible setups for today. Keeping in mind that we do have the Fed meeting tomorrow. It's generally has a large effect on the market, similar to an earnings report. So I'm going to have to make a decision at the end of the day on how I want to handle my current positions with that in mind. After the market closes, if you have any questions, I'm very happy to answer them. So if you don't understand something that I talk about today, or you'd like me to take a look at any of your positions, just please let me know and I will do my best to answer them for you. So, hey, Frederick. Hey, how you doing? Good to see you. All right, so let's go ahead, get the legal disclaimer done and out of the way, and I will be back in about 40 seconds. So hang tight, please.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, we got that out of the way. So how's everybody doing today? People have positions, having a good day. I can tell you, I was really surprised when I got up this morning and I saw where the market was. I was not expecting this at all. I think President Trump mentioned that he was willing to meet with President Xi of China at the G20 meeting, and so the market liked that. So again, we have the Fed meeting tomorrow, and I have seen this so many times in my life where, the market rallies into the Fed meeting because they're expecting something. And then sometimes the market is really surprised by what the Fed does, or even if the Fed does what the people expect, the market reacts differently than people were expecting, because that's just kind of how it is sometimes. Sometimes, you buy the rumor, sell the fact, it's baked into the cake. So I'm going to have to do some real thinking here at the end of the day and decide how I want to handle my positions. The Fed meeting does not start until 2 o'clock Eastern, which is 12 o'clock my time. But anyway, we'll just have to see at the end of the day. how I want to handle this. My gut feeling here, based on experience, and I certainly could be wrong, but it's always important to think about risk more than it is reward. Remember, you cannot become a good trader unless you have experience. You cannot get experience unless you do it for a long time by staying in the game and learning how to trade. If you have a huge wipeout, it demoralizes you, hurts your account financially, then sometimes you're not in the proper state of mind to trade. So, I mention this often, but it's important to, first of all, always think about risk. Always manage risk first. Have your process, do what you're supposed to do, follow your plan, and the money will take care of itself. I promise you it will. If you focus on your process and following your rules, the money will take care of itself. But if you're primarily focused on the money and not the process, in my 24 years of experience of trading, that's when you get into trouble. So, all right, well, let's take a look, see what's happening here. All right, so Amazon. I did buy Amazon back on the 14th of June, and the reason that I bought it, based upon another chart, was we had the 5 EMA crossing over the 50 EMA. And that is a good, valid, back-tested, profitable approach to trading Amazon when the 5 EMA crosses over the 50 EMA. If you were trading this completely mechanically, you would just stay in this trade until the 5 closed back under. So, that's what we call a total mechanical trade. A lot of the times I use the crossover systems to get me in the trade, but I do not trade them strictly mechanical. Then they become discretionary trades. Amazon is one of these. I'm not going to just hold this until it crosses back under. I'm going to phase out. As you know, I like to phase out. I'm going to phase out until either I'm completely out of the shares, out of my position, or I see something that I don't like it hits the 70 RSI and rejects it. Right? Now, I don't want to confuse you because there are some that I totally trade mechanically, like the Qs and the S&P. The reason that I don't like to trade the individual stocks completely mechanically is you're going to run into earnings. If you're in a long-term trade, you're going to run into earnings and you're going to have to take that earnings risk. So, as a general rule, I will trade individual stocks based upon crossovers, breaks of moving averages, but then so I enter them on a mechanical basis, but I don't treat them as a mechanical trade the entire time. Then they kind of become a discretionary trade after that. So anyway, I did buy Amazon here at about 186, 1860, about 1869. You can see that the last couple days it's moved up nicely, but that's the reason I took it, with the 5 crossing over the 50. And as you can see, I think yesterday I hit 1 profit target. You can see today I hit another 2 profit targets, got 1 at the very, very top. So we're up against this third ATR channel. That concerns me a little bit because 88 to 92% of prices usually stay over the third ATR, over the negative third ATR, and stay under the plus third ATR channel. So, it's possible that it could move up over. It certainly can happen, but we kind of play the odds. That's what I do, at least. I play the odds, and generally when it gets up here, it becomes a little, it starts to run out of gas. And you can see it was up much, much higher earlier when I got that second profit target. It's come back down. So I'm going to have to decide what I want to do with this at the end of the day, but we'll come back to that. But anyway, we did hit a couple nice profit targets, took about 25% of the position off. So we'll circle back to Amazon. DDM. I did buy DDM back here on the 6th of June. This was a completely mechanical trade. I'm in over the 200-day. I'm out under the 200-day, regardless of what happens with this. But remember, this is the DDM, right? This is the double leverage DIA derivative ETF. So I don't really have to worry about earnings when I'm trading the indexes, although earnings will have an effect on it, but you know, a small percentage, because any particular stock is a small percentage of the Dow. So you can see we had a huge day today. We hit 3 profit targets. What a huge day. I was not expecting this huge day. I was expecting something like that possibly tomorrow, but nice surprise, right? Nice surprise, but did hit 3 profit targets, getting close to running out of shares. This has been a huge trade back here from 45 up to 48.32. So really grateful for that. I definitely will be holding on to this regardless of what happens with the Fed and all that. So if it continues to move upwards, I will just continue to phase out until I'm out. Or on the other hand, if it comes back and closes below the 200, because that was my entry. But I think I'm out of about 80% of this trade at this point, and happy to be out of it. Ford. I did buy Ford. Well, actually I bought, so here was the day that got me interested. And the reason why is we took out this fractal. Here, fractal is a high with 2 lower highs to the left, 2 lower highs to the right. It did move up over all the moving averages. It came on strong volume. And more importantly, we were talking about this the other day, it's inside the trading bands, the 1 ATR and the negative 1 ATR. You see, my favorite trades come within this band because it, you know, let's just say we took the you know, right at the halfway point. I really like it, but the easiest movement comes from the bands, let's just call the middle of the bands, up to the 3rd ATR channel. Up here you start running out of gas. So it gives you the best risk to reward if you can take the entries within this band. If you're short, then you know the easiest money is made from here to here. But once you start hitting those lower 3rd ATR channels or those higher 3rd ATR channels, then you're kind of asking a lot, because percentage wise, when you get up here, it starts running out of gas. When it gets down here, it starts running out of gas. Not that we go below. You can see we went below, but very quickly. Excuse me. So this is the day that got me interested. I took a half position here because I felt that the next day it might come back and get another little lower, a little bit of a lower price. It's exactly what I did. So I bought half the position here. I bought half the position here, which gave me an average position of exactly $10. Did move up yesterday, did move up today. You can see I did hit 1 profit target today. It was up much higher actually earlier, but at least we did get 1 profit target and took a few chips off the table. All right, 5 below. 5 below, I entered this on using the weekly bars, and the pattern that I really love here is when you make a higher high. Notice it hit the 3rd ATR channel, and that was it, right? But it made a higher high over this previous high. Came down, which is normal, back into the value zone. That's where we like it, is the value zone. Then it starts to move sidewards, meaning that it's catching some support. It's not going down anymore. You don't have supply coming into the market anymore, which is good. It doesn't mean go ahead and buy, but I like the potential setup. Then I look for a trigger, right? So then I'm looking for a trigger. I thought I had my microphone off for a second. It's like, oh man, I've been babbling on here. No one can hear me. So the trigger was 2 weeks ago when this bar went down, tested all these prices down here. The market did not like those prices. It reversed back up. If it would have closed above this bar's close, we would have considered that a V1. That would be an entry, but it did not. But when a V1 fails and fails to trigger, then you can go for a V2. Day 1, or bar 1, bar 2, bar 3, bar 2 washes out bar 1. by a substantial amount. Bar 3 closes back above bar 1's close. That's the trigger. That's where we bought. So we bought at 129.55. We're at 130.95. So it is a profitable trade at the moment. These are my profit targets going up. A close below this red line here, if it untriggered, that would be my stop. But we're going to have to see, again, with the Fed information coming tomorrow with the Fed meeting, it concerns me. You can see we were up quite a bit higher today. We got thoroughly rejected at the 50 SMA on the daily. So I'm going to have to make a decision what I want to do with this trade. But it is in the money so far, so that's good. All right, so here is IBB. This is the NASDAQ Technology ETF. I did buy this yesterday here, and why did I buy it? Well, we took out this fractal. It's a little higher than I like to buy it, but it did take out this fractal here, took out these previous ranges over here. And then we also had a 530 EMA cross, and this particular moving average crossover system works well. It's profitable, back-tested system. I did take it based upon the crossover, did take it upon taking out the previous fractal back there. Strong volume. RSI reading was not overbought. MACD was positive, so that's why I took it. Now, when I take signals under the 200-day, I take a half position. That's just my filter. Unless there's all these other just perfect, but 90% of the time, I'll take just a half a position. Now, because it was such a big bar yesterday, I decided not to take the half position. I decided to take the quarter position. And the thinking was that if the market came back into the range of this day, came back a little, I would add my second position on, just like I did with Ford. But if I'm wrong and it just goes motoring up, at least I still have some. And that's exactly what happened today. So, would I like to have the full position? Well, yeah, of course. But am I happy that I decided to at least get the quarter position? Yeah, of course. I mean, this has been a nice big day. Did hit 2 profit targets here. Now, I'm not trading this as a completely mechanical system. I'm using the crossover system and the other indicators for my entry system, but I'm not going to just blindly hold this until we cross back under. Like I said, with market ETFs, generally, that's the only ones that I'll do that with. We have the 200-day above us here. This may act as some type of resistance. You can see we got, surprise, surprise, we got right to the third ATR channel, and that's where it stopped going up and started going down. So it's been a really nice trade. Glad I had the quarter position. But again, because of the Fed meeting tomorrow, I'm going to have to decide what we want to do with this going forward. But it is up, and I'm grateful for that. All right, so the Qs. I did buy the Qs back here on June 4th, and why did I buy it? Well, for a variety of reasons. Namely, we went under the 250-day moving average. Here's the 250-day, this smaller line. You could also base this off the 200, which is the thick black line, but we went under the 200, over the 200. That, again, is a quantified, profitable, long-term approach of staying out of the Qs when it's under the 200-day or the 250 and getting back in and staying in until it closes back under the 200 or the 250-day. Now, on top of this, we had this really nice V2. Here's day 1. Day 2 thoroughly washes out day 1. Day 3 closes above day 1. So I had 2 signals there. Oh, and 3. We went under the third ATR channel and back over. So because I had 3 such strong signals here, I bought a full position in this ETF QQQs. And as you can see, it's been a monster trade. I hit 3 profit targets today. Got some right near the top. So I'm getting close to being out of my positions in the Qs because I've scaled this entire way up. But this has been a really nice trade. I definitely will be holding this one. Again, this is a completely mechanical system where I'm staying in this baby until it closes back under the 250 day. But keep in mind, I'm out of such a large position that even that wouldn't hurt very much, right? If it just went straight down. So that's why I like these trend trading approaches, but I put my own spin on it and I phase out because I don't like just holding something. Because if this went here, went up to here and came all the way back down to here, and you had this huge profit and you had to give it all back, I mean, that's no fun, right? So just my personality. I know other people that don't phase at all. They just have one entry, one exit, and that's fine too. Some situations that's going to work better. Sometimes phasing is going to work better, but it's most important to find something that feels good to you as far as your personality and something that you feel like you can continue to do. So, so phasing works for me. So 3 profit targets today. It's been really great. All right. So in case we have some new viewers today, I do buy the S&P 500 each day at the end of the day, and I sell it the first thing in the morning. So why do I do that? Well, this is based upon a study from 1993 at Bespoke Invest on Twitter. I like that channel. But this study says since 1993, if you would have bought the SPY on the open in the morning, sold it on the close in the afternoon each day. So you bought it in the morning, sold it in the afternoon, you would have actually returned a negative 5.2% since 1993. So we know the stock market's been up since 1993. So how is that possible? So the second part, but if you did the opposite and you bought on the close, bought at the end of the day, and sold on the open the next morning, you would have returned 568%, meaning that more than all performance came in after hours trading. People bid the prices up in the after hour. People bid the prices up in the pre-market, and then they sell into those prices first thing when the market opens. And that's exactly what's shown in these numbers. The buy in the morning, sell in the afternoon, you would have lost 5.2%, but if you just did the opposite, 568. This is based through 2017. The more recent numbers based in January 19, the buy in the morning, sell in the afternoon would have returned negative 13.9%, but the buying at the close, selling in the morning, the more recent numbers to January 19 is actually a return of 634.2%. And then Steve Burns from at S. Joseph Burns on Twitter, he did a more recent study, 712.63% return. So that is a long way of telling you why I buy every day at the close, sell at the open. And you can see I did buy it yesterday at 289.39 in the afternoon, and I sold it this morning at 291.60 first thing in the morning. It's a little higher than it opened, but still really nice gain. So I will be buying this again today at the end of the market for sure. All right, here's our stinker. Man, it always seems like you have to have one stinker, but I think it's in a way it's a good thing because it's showing that you are having a diversified portfolio of positions. If you're completely 100% invested in tech stocks, you're either going to have a great day or a horrible day. But I like to round out my holdings, not just stocks. Different types of industries in the stocks, but I do like to buy oil. I do like to buy gold. I do like to buy natural gas, just so I have a mixture and some diversity of my holdings. So here's the diversity today. So I did buy UNG back on June 14th, and I bought it because the previous day we were under the third ATR channel. The next day we went above the third ATR channel, and at the same time we had this nice V2. Here's day 1, here's day 2, here's day 3. Day 2 washes out day 1. Day 3 closes above day 1's close. So I did buy it at the end of the market back on June 14th. It's under the 200-day moving average. And, my filter for that is I only take a half position, and I'm really glad I only did take a half position on this. Yesterday it tried to go up, came down, it held the halfway of this bar, so I did decide to keep it. But then today you can see it dumped. And so I will definitely be getting out of this position. Here was the washout bar of the V2, day 1, day 2, day 3. The washout bar, generally a close below the halfway of the washout bar is my signal to entry. And so we're way below that. So I will be getting out of UNG for a loss. If it goes under 30 and back over 30, I might approach it again. So we'll just have to see what happens. All right, Verizon. Verizon also down today. I did buy Verizon back on the 14th of June, and I bought it based upon this beautiful fractal. Here's the high, here's the 2 lower highs to the left, here's the 2 lower highs to the right. This day did trigger this fractal. It was within the ATR channels, the plus 1 ATR channel and the negative one ATR channel. Unfortunately, it just started to go against us just as soon as we bought it. So I did keep it yesterday. My initial stop was a close below the 10 and the 20-day moving average, and right here we're exactly there. It's exactly a 50 RSI. So depending what I do with the stocks at the end of the day, I may get rid of this, because I may get rid of all my stocks at the end of the day and just go flat, but just have to make a end of game decision. But anyway, so this one has gone against us, unfortunately, but that's how it goes. The Verizon and AT&T, people look at these a little bit as more kind of safety dividend stocks. So sometimes you never know. Sometimes they go racing up with the rest of the market, and sometimes they underperform like they are right now. Okay, last one is MasterCard. I did short MasterCard back on the 10th of June. I don't do many shorts. This was only the second short that I took during this live stream, but I shorted it because this, on the day that we shorted it, it went above the third ATR channel, then closed below third ATR channel. It tested the 70 RSI, rejected it, closed below the 70 RSI. So that was my signal to just go ahead, and I felt like it was a really good short setup. And as you can see, it was. It's moved down, moved down, moved down, moved down, hit one profit target down here today. One important point is this blue line was the 50 RSI of today. You see how we went right almost to the penny to the 50 RSI and we bounced? When I'm shorting up here, I want to see how the price reacts around the 50, because that's support underneath me. So did get one profit target much lower today, getting close to being out of the position, but this was a great short. So I will be exiting my position today because it did test the 50 and rejected it. And you can see it's working on a V2, right? Here's day 1, here's day 2, moved up, came down, it's kind of been going sideways, stabbed down, reversed. That could be a possibility actually for a long position, but I'm certainly not going to, I'm not going to initiate any positions today. I mean, we're going to go through the charts just like it was a normal day, because there are a lot of good setups today, but again, holding into the earnings report tomorrow concerns me. But this has been a great short. I definitely will be covering this and going flat today. All right, let's see. Dennis Core. Hey, how you doing, Dennis? Thank you for coming by. Appreciate it. I think this is the first time you're here. Thanks for saying hello. Frederick says Mario Draghi as well. What do you mean there, Frederick? I'm not sure. I mean, I know who Mario Draghi is, but I'm not sure. Oh, Mario Draghi is here with us today in the live stream? Okay, good. All right, so that's the plan for the current positions, and we'll visit these one more time before the end of the day. Okay, just quickly, I wanted to show you, we kind of do this every day, but I like to show you some good advice from some famous traders and, something for you to think about and kind of embed into your mind. This is from, let me make sure I got this guy's name right, Kora Reddy. And Kora just wrote a new book that Stephen Burns turned me on to. I read it. I really like it. I'm going to put an Amazon link to the book in case you'd like to take a look at it. He has some approaches there that I've never really thought of, kind of thinking outside the box trading wise, and I really enjoyed it. So I'm going to post the name of the book. It's actually called SPY High Probability Trading Strategies by Kora Reddy, and I'll post the Amazon link here in the chat and then in the description of the video when we're done, and then also his Twitter handle. But this did resonate with me. Rule number 5, remain consistent. Successful traders find a formula and stick to it. I would suggest a trader, particularly a novice trader, should adhere to 1 or 2 carefully selected trading patterns that work best for him or her. The need for a plan, a strategy, and applying it in a consistent, methodical manner cannot be overemphasized. When it comes to trading, rules are not made to be broken unless you want to end up broke. More importantly, rules exist to protect us from ourselves. So, truer words I have never heard. I talk about this every day as far as making a plan, coming up with your rules, position sizing correctly, and not straying. I mean, those rules, like he said, rules exist to protect us from ourselves. And if there's ever an industry where you need to protect yourself from yourself, it is trading. So here in the chat, I'm just going to put in his information. Oh, dang it. I guess it's not letting me put a link. Let me try one more time. Well, if I can't do it here, I'll just put it in the description. Let me try it one more time. Nope, won't. It denied me. I guess it doesn't let you put in URLs. All right. So anyway, here's the book on Amazon. And I did really quite enjoy it. And like I said, I was turned on to him by Stephen Burns. And I'm really glad that Steve turned me on because I really, really like the book. Really, really like the book. Totally different. Be prepared. It's a totally different approach. But all right. So let's go through and take a look in some possible setups today. All right. Well, Apple is having a really, really nice day. It did have a 1050 EMA cross the other day. I decided not to take it because I decided to take the trade on Amazon instead of Apple. I didn't want to have too many tech stock and too much correlation because, normally they're going to move up or down together. That's exactly what they're doing. So if I had, of course, it would have been a double win, but I would have had double the exposure. And again, always, always, always think about the risk portion before the profit portion. So Apple's having a great day here. It looks like it's going to close outside the 30 ATR channel, and that's really good because closing outside of the 30 ATR channel means something is really, really strong. Advanced Micro Devices had this really nice big move up, started to move down. I think yesterday I told you now that it's within the ATR channels of what I call the value zone. This is when we want to possibly start looking for an entry. Well, there is a V2 today, right? Here's day 1, day 2 washes out day 1, day 3 has to close above day 1's close. But what I don't like about this, everyone, is I don't like how we went straight up and straight down. I really would rather prefer it going up, down, sideways for a while, then get the V1, V2. This is straight up, straight down, then the signal. So based upon that, I'm not going to take it. Also, this V2 happened with a gap. You can see, doesn't mean that it doesn't mean that it's still not a good entry signal, but you know, the person that taught me this, Kerry Lavorne, if you do have a gap, that kind of nullifies the signal for him. So I am going to just pass on AMD. I mean, it's good, right? I mean, came up, came down. I wanted one more day or two of moving sidewards. I mean, that his approach is called the squeeze play with the V1s, V2s. And the squeeze play means that it's moving sidewards for a while. Here, there's no sidewards movement. So, you know, could be a great trade. It's over 50 RSI, who knows, but I am going to just go ahead and pass on it. All right, Amazon we have, based upon that 550 crossover. Boeing, look at this, everybody. Unbelievable. So this is very difficult. You know, I was looking at buying this with the close above the 200, but the move above the 200 is so large, it's essentially the whole move that I would have been looking for. See how we're now at the third ATR channel? So I can't bring myself to buy this because we're already at the third ATR channel. This is really, if I got in somewhere here, this is about where I'd be looking to get out. So I'm not going to get into something where I normally would have just been getting out of it. If this comes back down halfway, you know, back into the range, then I may start initiating position, but I just can't bring myself to buy it here. We're to 65 RSI, so you know, we may get to that 100-day moving average. That would put us close to a 70 RSI and the 100-day moving average. But it's a great move. I think this is very positive for Boeing in the long run, but from a trading perspective, a day-to-day trading perspective, it's a little too high for me to buy here. Huge volume too. So any of you had Boeing, congratulations. All right, so here we have Alibaba. We've been talking about the possibility of buying Alibaba if it closes above the 200-day. Well, here we are, right? And we also have this higher low. See how this low is higher than this low? Now we have this move back above. We did run into some problems at the third ATR channel. So this one does look pretty good. I'm going to put this on the possibility list for today at the end of the day. So let's move on to Caterpillar. Caterpillar having a big run today, does have the 200-day above it. So nothing here, you know, the risk to reward is skewed. In order for me to get interested in Caterpillar, this would have to, at this point, it would have to close above the 200 to put a definitive stop underneath me. But right now, it could certainly get sold into in the 200-day. Canopy Growth up a little today. I did buy Canopy Growth here when we rejected the 200, closed back above it. My stop was a close under the 200. Next day it went under, closed back over, kept me in, and the next day it did close. So I did have to take a small loss on Canopy Growth. So, you know, you're going to have small losses. You're going to have them all the time. That's just part of trading. You know, when you start off, you're going to have them 40, 50% of the time. So get used to losses, but remember, small losses are fine. They're totally acceptable. And it doesn't mean that you're not a good trader. It means it's a good trader if you get out of them and keep those losses small. Cisco up today, but nothing there. The Dow we have. Walt Disney, look at this huge reversal. It was up huge earlier and completely reversed back down. See how this is a 2 ATR move. From here to here is an ATR. From here to here is an ATR. This is a 2 ATR move. So this means that there's a lot of movement in that stock, and it's moving more than the average normal range, twice the average normal range. So nothing on Disney. Excuse me, Etsy. Well, you know, we had that run up. Same thing with Etsy. You know, we're starting to come back into the value zone, but I want to start to see these bars narrow, not so tall, moving sidewards within the value zone, and then a stab down a reversal V1, V2 entry. So nothing on Etsy at the moment. Ford we have. Look at Facebook, everybody. This had this huge move. Look at this huge gap up today, and people sold right into that gap. Kind of, we were talking about the S&P, right? Buying in the morning, selling first thing in the buying in the afternoon, selling first thing in the morning. Well, this was thoroughly sold into. There's a lot of, news about their new cryptocurrency, Libra, coming out. That's moved the stock strongly, but I think today they actually announced they were going to start it. So I think people sold into the news, obviously. I mean, it was up $5 at one point. Now it's down. So nothing on Facebook. Five below we have, but just to show you again, this is the pattern that I'm looking for. Nice move up, move back down into the value zone, then the sidewards movement. This is the squeeze, then the spike, then the reversal. All right, gold. Nothing on gold today. I did buy gold back here on the 30th of June. And why did I buy it? See the fractal? The high with the two lower highs to the left, two lower highs to the right. It came within the ATR channels. We had MACD crossover. We had over 50 RSI. And then we also had a beautiful crossover system. We had the 520 EMA crossover system. So we had lots of signals here. Of course, I took a full position and we had a huge trade on this. I got out right about in this range. So that was a great trade. Nothing here today though. Hey, Bruce is here. Good to see you. Yeah, I did notice MACD was negative on AMD. Is there a book on the squeeze play? David, there's not. Kerry Lavorne was one of my mentors. He's a trading partner and business partner with Dr. Alexander Elder, of whom I'm sure many of you are aware of. And I studied one-on-one with Kerry for about a year. And he has not written a book. This is just what he has come up with. It would be a great book. But no, there is not. If you're not clear on these V1s and the V2s, just let me know, and I will show you, because like I spent many hours with him, so I do feel like I know it pretty well. But essentially, David, this is a perfect example. Move up, higher high, move down into the value zone, move sidewards, spike down, V2 reversal. All right, Google is up today, but nothing there. Goldman Sachs having a nice day, but under the 200. IBB we have hit 2 profit targets. Intel, this was another example of a under third ATR channel, under 30 RSI, and then the next day back over. So we did buy it here back on the 29th. Moved sideways for a couple days and then just took off. We got out about up here on the trade, so that was a good trade. IWM, well, shoot, here you go. This is another good potential buy. We took out this fractal. Here's the high with the 2 lower highs to the left, 2 lower highs to the right, and then today we close. Looks like we're going to close above the fractal, and we're going to close above the 200 or to 56. It's a good, it's a legitimate system. It's a back-tested system, but again, I'm going to have to make a decision at the end of the day whether I want to do this going into that news tomorrow. So it is totally valid. So I'll mark it. Coca-Cola, nice move up. I would like to see this come back into the value zone, have the bars narrow, go sidewards, spike down, reverse V1, V2. Lockheed Martin. I did nothing today on Lockheed Martin, but I did buy it back here on the 29th of May when we had this nice V1. See how we moved up, we moved down, we moved sidewards. The day that I bought it, it spiked down, went below, and then closed back above. That was my entry, and it was above 50. MACD was negative, I do understand, but you can see we had a great trade from here, phased out right up to about here. MasterCard, we talked about that. I will be getting out of this short, down today on a huge day. So I will be exiting this today because we did reject the 50 RSI and that support underneath us. 3M. How about that, Dr. J? That's Dr. Jorgensen's favorite stock. So, had a good day on that. What do you think about that, Bruce? Up almost 3%. Good job, bud. And, would I buy this today? Dang it. Again, the China situation. But look, here you have a fractal. High with two lower highs to the left, high with two lower highs to the right. You had a big, strong day. You're only at a 52 RSI. MACD is positive. This is probably, now you have the third ATR channel up here, so you might run into some resistance up here. I don't think I would buy it today. I would look for a pullback to halfway and then enter the position there. Merck, big, strong day. Up against the third ATR channel, so nothing there. Microsoft, big day. Looks like it's going to close above the third ATR channel, which is pretty amazing. But nothing too high for me right now. Netflix did bounce nicely off of that 200-day, didn't it? But nothing there for me. Nike, here we are, triggering this fractal. Beautiful, nice fractal. It's only a 56 RSI, closed above the 50-day moving average. Here we have a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1, day 3. Certainly going to close above day 1's close, and you have the fractal. Man, if it was any other day, I would take this, but we'll mark it. We'll make a decision. Philip Morris. I did buy Philip Morris here when we went under the previous day. We went under the 30 RSI. We went under the third ATR channel. Next day we closed back above. That was my entry. Next day it went right against us, right back for us, and then it moved sideways for a couple days, and I just exited the position here because I didn't like the movement. Very, very small loss, but if something's not working well, it's not doing well, I don't have to wait for my stop to get out if I don't like it. If I just don't like the action, I can just go ahead and get out, and that's what I did, which was a good move. PayPal got sold into right at the end of the day. Mount Doji's been looking at Nike. Yep. I marked it as potential. Qs, of course, we hit 3 profit targets there. Silver above its 200-day moving average. Interesting. I'm not going to buy it here again because of the Fed meeting tomorrow. Silver's probably going to move a lot tomorrow based upon what comes out of the Fed regarding interest rates. SPY, bought in the morning, sold in the afternoon. So that was a nice trade. I will be buying that one for sure at the end of the day. Square, this is nothing today. We did reject the 200-day again, which is not a great sign. But what I want to show you, because this is such a perfect example of a double bottom with the bullish divergence. Here's your low. You have a rally. You make a lower low. The first low, you have the deep MACD bars, meaning there's a lot of momentum. The second time you go lower than the previous low, you have a really small, shallow MACD reading. This is a bullish divergence. Now, just because you get a bullish divergence doesn't mean you just go ahead and pile into it. You need a trigger. Well, here's the trigger. You have a V2, day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. So that is one signal. It also happened below the -1 ATR channel and then closed back above the -1 ATR channel. And then we also poked our head out here to a new range and then closed it, making this a false breakout to the downside. So you have a false breakout to the downside, you have a V2 entry, you close back into the range, you close back into the channel. MACD was positive. We did buy it here. It was a beautiful trade, and we exited right about here, I believe. But that was no, I think it was higher. I think it was higher, somewhere in here, but it was a 14% trade from top to bottom. All right, so nothing there today. AT&T, nothing there. Bonds, nothing there today. Tesla, nothing there. UNG, that was our stinker today, so we will be getting out of that. USO, I did buy oil here when it went under the third ATR channel, back over the third ATR channel. It went under the 30, back over the 30. Just kind of hung out, didn't do anything. Yesterday it closed below the previous day's low. It wasn't acting well, so I went ahead and sold it. And today it's up 4.26%. But that's how it goes, folks. You're going to run into this. Don't burn any calories on it. You know, don't let it rent space in your head. It happens, right? It just happens. So it would have been nice to have been in it, but that's part of trading. The dollar is moving up. Visa, nothing there. The VIX, we could have a V2 tomorrow. Here's day one washing out day two, or day two washing out day one. We could possibly have a V2 tomorrow if it closed back above yesterday's close, but nothing today. Verizon is now under the 50 and under the ATR channel, or the 10 and the 20 moving average. Energy Select did hit this fractal here at a 52 RSI. This looks pretty good, but again, I'm concerned about the Fed meeting tomorrow. Financials rallied. Look at real estate, everybody. Above the third ATR channel, below the third ATR channel. Above 70, below 70. Let me take a look at MasterCard. Ring any bells? Exact same situation. Above the third ATR channel, under the third ATR channel. Where were we? Same thing today. Above the third ATR channel, under the third ATR channel. Above the 70, under the 70. Normally, I would enter a short on this, but because of tomorrow, it concerns me, so I'm not going to. All right, so it's really sad when you have these good signals, but look, I'm going to try to set a good example here, and because we have major news tomorrow, I am just not going to initiate any trades today. I'm just going to have to look at tomorrow as a earnings day and not gamble. It may go racing up. It just may, and that's too bad, right? But I think I'm just going to take a look tomorrow at tomorrow's closes after the Fed is out of our hair and base it upon that. But if this was a normal day, this is a nice trade on Alibaba. Higher low, above the 200, big volume. IWB took out this fractal, closed under the 200, back over the 200. And Nike closing above the 50, taking out this fractal. I mean, it all looks good. So what I'm going to do here, I'm going to go ahead and I'm going to get out of my positions that are not my mechanical entries. I'm going to get out of all my discretionary incomes, just basically go into tomorrow flat.
Order filled.
All right. So Amazon is going to go. DDM is our mechanical. We're going to hold that. Ford, I am going to exit Ford. And again, this is based upon risk, not profit.
Order partially filled.
All right. 5 is gone.
Order filled.
IBB.
Order filled.
Qs I am holding because they are a total mechanical system. SPY, I will buy that. UNG, I've got to go ahead and get out of UNG.
Order filled.
And Verizon was also a discretionary trade, so I'm going to have to get out of Verizon.
Order partially filled.
And MasterCard.
Order filled.
I'm going to cover that short. So that was a good trade. Now, I've got to do this all again. I trade multiple accounts, so I'm going to have to hurry and do this
Order filled.
So I should only have DDM and the Qs. That's correct. So let me go over here and do this in the other account. And then when the market closes, if you have any questions, I'm very, very happy to answer them. So start thinking if you have any questions. So here goes Ford.
Order partially filled. Order filled. Order partially filled. Order filled. Order filled.
Keep the Qs.
Order filled. Order partially filled.
Whew, boy, that was a house cleaning, wasn't it? Now, listen, I could have waited until tomorrow at 12 to get out of these positions as well. But again, in my experience on these Fed days, it can be so volatile. And we've had such a strong day today, and we've had such a strong June that, you know, I want to take some chips off the table. I want to be conservative. Anything could happen tomorrow. I mean, anything. We could be up 500 points tomorrow. Who knows? Or we could be down 500 points. So again, you know, always look at the risk possibility before anything else. Let me go ahead and get our SPY position, because that one will not be affected, because that will be overnight.
Order partially filled. Order filled.
All right, so
order filled.
292.12. All right. Boy, this is the lightest I've been in a long, long time. And it feels pretty good, actually. It feels pretty good, but it's tough to look at these other positions here that have these nice signals and not take them. But that's fine. That's fine. We'll just have to get through it. Steve says, hey, Steve Burns, how you doing, my friend? Things are coming by. Great day to be a bull. Thank you, Draghi. That's right. Yes, it was a great day. It was a big day for all of us. I was not expecting this kind of day. I thought it'd be another one of those sidewards days. Mount Doji says, I was thinking about sitting on the sidelines as well tomorrow. Yeah. Well, you'll know in hindsight whether it was good or not, but yep, Steve says Fed day equals volatility. That's right. Frederick says, what is the discretionary trade? Sorry, I did not understand. So a discretionary trade, Frederick, is a trade where I can make adjustments to it. I can use my own discretion whether or not I want to stay in the trade, get out of the trade based upon the price action. That's compared to a mechanical trading system where the rules are set and your hands are kind of tied. You just do what the signals tell you. Get in when the signal tells you, get out when the signal tells you. But a discretionary trade puts more power in your hands to say, you know, if it keeps moving up, I'm going to hold it. If it moves up and reverses strongly, then I have the ability to get out of the trade if I want. I mean, you can always get out of the trade, right? It's up to you, but I like to define my trades discretionary or not discretionary before I get into it. It takes a lot of the pressure away from me because I can look at a chart any day and find a reason to get in or get out, but it's just easier state of mind wise just to label your trade. This is discretionary or this is non-discretionary. So yes, I will look at that as soon as the market closes. So let's see. Yeah, big day. What a monster. So again, because of the meeting tomorrow And in addition, because Amazon did reject this third ATR channel, I did go ahead and just lock in the trade.
Order
But
cancelled.
mainly because of the Fed meeting tomorrow. I did keep the DDM. Ford,
Order
I
cancelled.
did lock in this trade. It was a nice couple day trade, but I wanted to take that off the table. 5, I also took off the table because it was a discretionary trade. IBB, nice one-day trade for 1.38%, so that was good. I did keep the Qs because it is a non-discretionary trade. SPYs, we had the overnight SPY. I did buy that at the end of the day. I'll sell it first thing in the morning. UNG was our stinker, got out of that today as well, and Verizon got out of that as well because that was a discretionary trade, and covered our short on MasterCard. So anyway, that is the end of the market, and very light going into tomorrow. And I think we're going to have the volatility tomorrow. So tomorrow's close is going to be a very interesting time.
Order cancelled.
Is my prediction. So before we get to questions and answers, I do just want to hurry and quickly tell everybody that I do offer private one-on-one teaching, coaching, and mentoring lessons in the evening time via Skype. So, I really do like to teach people to trade, and it really does help when you learn one-on-one with the person that's teaching you so that you can ask them immediately if you have a question. But basically, this starts with a phone call, just a free phone call, just for us to kind of get to know each other a little bit better. I want to get some background on your experience, how long you've been trading, what you trade, how you trade, what the challenges are that you're facing, and what you'd like to improve on. And then I'll sit down and I'll create a trading plan for you based upon, how much screen time you want, what types of the day you trade, your financial situation. But I'll put together a really good trading approach for you, that will kind of fit you and your personality. So if that's of interest to you, please let me know. Like I said, it's in the evening time via Skype, and my email is in the description of this video, and then my hourly rates are also in the description of this video as well. So if that's of interest to you, let me know. And then if you could do me a big favor and hit the thumbs up button, that helps with the rankings on Google. So if if you're getting something out of these live streams, you think it's of value, do me a favor, hit the thumbs up button, subscribe if you haven't subscribed to the channel, and share it with some friends or share it on social media, and help me build the channel. So there's a lot of people that need help out there that have a really tough time with trading and losing money, and I would really like to make a positive impact on their life by getting to this channel and hopefully them learning some of these good principles. So okay, that is, what was that? Okay, so let's see. Frederick says, or Mount Doji says, would you mind taking a look at ATVI? Well, all right. So, this is in the vein of a V1, V2 squeeze play situation. We come up, we make a higher high, we come back down, we poke our head into the channel. I like when it's a little deeper in the channel than right up here. And technically, yes, this did create a V2, but there's a couple things that I don't like about this V2. Here's bar 1, or day 1, day 2, day 3. Day 2 did go below day 1, but not by very much. It didn't wash it out by a quarter of an ATR. From here to here, from here to here is an ATR. So a quarter would be about this much, and this only washed it out maybe a 16th or an 8th. I would have liked to seen a better washout. And then it did trigger, but technically, yes, it did go below. And then it did trigger a V2, but you see how it gapped? I take a little bit points away if it does gap. So, it's not bad. It is moving sidewards, did move up sidewards. It's okay. It's okay. It's above a 50 RSI. MACD's positive. If I did enter this, I would definitely use the 20-day as my initial stop. But, I would grade this like a C plus or a B minus, more like a C plus, just because it's a little high up here and not a very good washout, and it gapped on the V2. Frederick says, all right, okay, right, it's more with feeling than following the rules. Well, you're still following the rules, but like, let's say, for example, Amazon. Discretionary trade. Do you see how it hit the third ATR channel and closed back below, created this kangaroo tail? You know, to me, that's bearish. This allows me to get out of, if it's a discretionary trade, it allows me to get out based upon not my feelings, but based upon some kind of price action that's negative, right? And, you know, I think if you look at that, you tested the third ATR channel, you have a bearish kangaroo tail. That to me is bearish. So if I want to get out of the trade, that allows me to get out of the trade, not just because I have a gut feeling or because I have a feeling, but based upon some kind of negative price action would allow me to take it off the table discretionarily. If this were a mechanical trade, so if all I'm doing is trading the 5 over the 50, then no matter what happens price-wise, even if it's really negative, I can't get out of the position because I made that decision before I got in. So, you know, if I made the decision I'm buying the 5 over the 50 and I'm staying in regardless of what happens unless it closes back under, then this kind of bearish move here, I can't get out because it is a mechanical system. But if I go into this trade thinking, if I don't like the price action, it's a discretionary trade. If I don't like the price action, then it allows me to get out. So you still need a real reason to get out, not just a feeling. So I hope that's clear. If it's not, let me know, Frederick, and I'll try again. I missed the name of the book you showed us earlier. Okay, so the book was, I think you can see that. Yeah. SPY High Probability Trading Strategies by Mr. Kora Reddy. And he is friends with Steve, and Steve turned me on to this book. I read this book the last couple days, and I really like it. Some of these approaches I've never heard of before, but they were quite interesting. I got to tell you. He's very detailed with his numbers and his statistics, and I think it's a great book. I'm glad Steve turned me on to it. So I'll post the link in the description of this video, but you can see, you just search Amazon, High Probability Trading Strategies, SPY High Probability Trading Strategies by Kora Reddy. Mount Doji says, I'm enjoying hearing your breakdowns of V1s, V2. Thanks for the help. I never knew about the gap issue. Yeah, I mentioned it a few days ago. The thing with gaps like to be tested. If something goes from 100 and gaps up to 102, the market's never really tested those gaps. So gaps tend to get tested. So why do you have so many line on your ATR? I only have 3. Well, that's a good question. Because, and I learned this from studying with Dr. Alexander Elder, but it's very rare. I have 6 ATR channels. 1, 2, 3, 4, 5, 6 to the upside and 6 to the downside. Now, I focus mainly at the third ATR channels, the plus ATR channel and the negative third ATR channels. But if a price does get as high as the 6 ATR channel or as low as the negative 6 ATR channel, that's what Dr. Elder calls trading in extreme. If a price gets down to the 6 ATR channel and it lines up with the major moving average on a larger time frame or something, I may take a position there because it's at such an extreme. So it's very rare that prices get below or above the 6 ATR channel. And if they do, they really have a lot of resistance to the upside and a lot of support at the downside. A lot of the time, not all of the time. Obviously, if it every time it got to the 6 ATR channel and went back up, we'd just wait for that, right? But a majority of time. So, if you want to have the 6 ATR channels on there, just add another 3 channels to the upside and another 3 to the downside, Frederick. Frederick says, I see, makes sense. We gamble with feeling. Yeah, don't base it upon your feeling on that discretionary. Base it upon, you can get out of a discretionary trade, but base it upon some kind of negative price action. Gordon Russell says, thank you, Greg. Thank you, David. Workhorse. Oh, I like how you spelled work with the umlauts. As I pronounce it correctly, umlauts? Workhorse Fitness and Training. Oh, cool. First time here, love the info. Oh, good. I'm really glad. I love the name. So Horse Fitness and Training. So I guess you do fitness and training with horses. That's great. I think it's horses, or maybe it's for people, but good name anyway. Yeah, thanks for coming by, Workhorse. Hopefully you'll do it again. If you have any questions, just let me know. Andy, is a V1 signal considered stronger than a V2? That is a good question. And my answer to that is no. I have asked Carrie Lavorne this specifically about 100 times, and they're both equal, actually. For some reason, I have a preference for V2s. I don't know why. Probably just because I've had more profitable trades with V2s than V1s, and V2s are showing that it's moving sidewards a little bit more, but he says there's no difference. But they're really good entry triggers, folks. You have to find a good setup, but that setup doesn't mean buy. You have to look at the context of the chart, and then if the context look good, then you need a reason to get in. You need a trigger, and a V1 and a V2 trigger will trigger you into the trade, into the direction that you want it to go. If it doesn't, it's not going to trigger you into the trade if it's going down, just by the fact of that's how V1s and V2s are set up. Oh, he does personal training. Okay, for people, for humans. That's awesome. I love that name. All right, well, we had a nice big day today. I was not expecting this at all. So nice surprise. It's been a really nice profitable June, and I'm thankful for that. Tomorrow is the big day. So like I said, I got out of all of my discretionary trades because I focus on risk before I focus on profit. And it might go roaring up tomorrow, and if it does, I won't be in it, and that's okay. And those of you that are in the positions, I will be really happy for you. But for some reason, if we have some issues tomorrow, if the market does not react positively to what's said, then that's the other side of it, right? So all right. Does anyone have any other questions or comments or anything that you would like me to clear up? Otherwise, I'm going to get my hiking boots on and go up in the mountains. All right. Okay, everybody. Well, thank you so much for stopping by. I really do appreciate you, taking the time out of your day to spend it with me, to, try to learn how to become a better trader. And I hope the repetitiveness of these live streams each day, it's starting to sink in. You're kind of starting to grasp some of these concepts. So if you have any questions in the future, feel free to just go ahead and send me an email. It's in the description of this video, or message me on Twitter as well. Workhorse says, I got in small position calls and puts sitting on mostly cash. Okay, good. Thanks, Greg. You're welcome. You're welcome. You're welcome, Andy. So thanks to David, thanks to Workhorse, thanks to Frederick, thanks to Steve, thanks to Dr. Jorgensen. Who am I missing? It's Steve Burns. Thanks to Mount Doji, as always, buddy. David Gordon Rustin, I think I already said that. Andy, for sure, thank you. And Dennis Kora. Oh, and Johnny. Thanks, Johnny. So always great to have you guys. All right, well, listen, try to tune in tomorrow in the last hour of the market. Should be really, really interesting and should set the tone for the market going forward. So on the way out here, I got to play the disclaimer. So have a great day, everybody, and hope to see you tomorrow. Take care.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.